Well, it's been a long week for the market, which dealt with a variety of issues and challenges. You know what? Some of them were even economic. Turns out dark clouds of anxiety hovering above Washington, D.C. was able to cast a shadow over good business news and sunny skies right here in New York City. Relatively strong bank earnings helped propel the market higher right out of the gate, but, well, those gains faded quickly, and then a malaise took hold. From that point, there was no chance that this market would find a way to rally into the close. The only hope, of course, was that the losses would just be benign. And if there's one characteristic about this market in 2018, it's that sharp afternoon sell-off that normally begins around 2 p.m. Now, often these sell programs are just triggered without any visible news at all. Today, though, there was a report from the Office of the Inspector General of certain allegations related to former FBI Deputy Director Andrew McCabe, reinforcing the notion that the intelligence community leadership ran amok, perhaps still is, and were driven by personal animosities and grudges rather than their oaths of office. This also ratchets up the notion that maybe Rod Rosenstein could be shown the exit very soon. No matter if that is the case, and no matter how much the mainstream media screams that this will be a constitutional crisis, it won't be. Coming into today's session, again, those big banks were promoted as saviors, ready to grab the rally baton from financials, from technology and lead us all the way. But as it turns out, those big behemoths, well, they dropped the baton. BlackRock, J.P. Morgan, Citigroup all fizzled after strong moves. The fact is the XLF was the biggest S&P sector on the losing side. That's your financials. Investors, they fled financials, they fled technology, and they migrated into the safety of utilities, real estate, and consumer staples. Now, ironically, investors, if they were seeking the comfort of value, they might have bought financials. The S&P financial sector has the lowest forward PE ratio, less than 13. So on that note, I want to say take care to understand the news from some of these big losers before you follow the herd. Earnings season is treacherous. 95% of my lifetime losses have all happened during earnings periods. And I got to tell you, more than half the time, I've come to regret taking those losses within months. Now, for all the wild swings and the tabloid headlines, the market, of course, finished higher this week. This makes me believe that smart money is picking its spots and slowly building positions. If you are too intimidated to buy, I would say at the very least, hang in there, particularly with these companies that are growing the top line organically, have pricing power, and have expanding margins. I'm not sure how much longer the market remains in this sort of range-bound point that it's in, but I continue to be very excited that it's overvalued, that it's oversold here. And every time these earnings come out, it becomes even more oversold technically. So hang in there. I think we're going to be okay.